All right. Thanks, Leon. Over to you.
Okay, great. All right, thanks, and good morning again to everybody from our side. We are in session 8 of 8, and so today we need to round things off, and for that reason I'm going to be spending the entire morning dealing just with the finalization documents. Now, as I said last week, we did ask if you could please go through the Schedule of Identified Misstatements video if you had a chance. That is an hour-long session virtually on its own to just discuss how that working paper works. There's a lot of detail in there. We have tried to make it as easy as possible to fill in, but you do just need to understand the flow of that document before attempting it. So I've opened up the documents that we're going to work with already, and it is going to be all of the others in the section up to 0605, and so we'll systematically work our way through them. Now, one of the documents we haven't looked at in the audit process, I'm going to start with 0205, which is our materiality summary. There is a revised materiality document. I'm just wanting to show you where it is. So if you recall, in the first week, we went and we calculated materiality. Now, that materiality gave us our planning materiality. The standards, however, require that we need to consider revising materiality if new information comes to light. And so instead of going and changing the planning materiality, which technically should be signed off and should not change, we have a revised materiality working paper where you can go in and it just pulls in the latest trial balances for you, and you can then just go and calculate a revised materiality. However, in the past, there was always the concept of a final materiality, but the final materiality has actually fallen away from the standards, and all the standards now tell us is that we need to do a final revision of materiality. So what this document is trying to do is, firstly, it's just asking you one important question. Based on your assessment, is planning or revised materiality still appropriate for the evaluation of the identified misstatements for the purposes of the audit opinion? So what it's doing here is it just pulls through the planning materiality values from our planning materiality. If we had done a revised materiality, it would also open up the revised materiality in between. And we now need to go and decide, are these numbers 6 million overall materiality, 4.5 performance, 1.2 for the specific. Is this appropriate for being able to evaluate misstatements, yes or no? If I say yes, that's it. That's all you need to do on the document. You're going to continue using this materiality going forward. However, if you say no, these are not appropriate values, it's opening up additional columns. And there is another materiality calculation now available in the sheet below, and it is a replica of the planning materiality. Again, you decide what figures do you want to use. Generally, you want to use final rather than opening because you might have had journals. Again, confirm periods, confirm the users, double check that the bases are appropriate, and then go and plug in your new final materiality figure. Again, there is no formula in place to do so. You need to physically go and type it in. Let's go and make it 5.9 million and give good reason for that materiality assessment that you've made, and why have you maybe reduced that materiality, or if you've increased it, probably give very good reasons why you've increased it. Okay, so you need to document the reasoning. You can also then go and change your specific materialities. I'm going to go and put in the same amount again. I don't feel that needs to change. Your threshold is changed slightly, although the threshold is not too much of an issue when it comes to just going through the significant or the summary of identified misstatements that we have. Once you've plugged those values in, we go back to the summary sheet. It then just goes and confirms for you what that final value is that you're going to use for your assessment. So that is what the materiality summary document is supposed to do. And these values then carry over to your summary of identified misstatements. You can't work through the summary of identified misstatements until such time as you've actually gone and done a final revision of materiality, if it is just to say you confirm that your planning materiality is the appropriate materiality to carry forward. All right, so we then move on to 0 to 15, which is my final analytical review. Again, the final analytical review is very much a replication of the planning materiality. And once again, we have the 2015, the 2014, the 2013 balances. We look at what percentages have changed, and once again we go and look for any deviations that may be above 10%. However, what we did for planning purposes was to go and identify risk. However, in finalization, the question is about, is this movement, do we understand it basically? Have we gained enough information in the audit to go and understand why property, plant and equipment has jumped by 41%? It might be something simple. They've purchased 10 million rands of land and buildings. Then you understand that, and then that's what you would then document in the comment section. Whether it's management comments or just your explanation, I think there's not a requirement that we again go to management. We did get their initial comments as well, but depending on the variance, or if you're still unsure, you might need to get management comment. And again, you can comment in other areas if you wish. But the point is, again, we've got a replica of our financial statements. Please do make sure, especially if you've done some custom linking, that the values are carrying over correctly from the financial statements, and then go and document your understanding of why these movements have taken place. There is also a ratio analysis. The same worksheet is in place again. Here are all the ratios, again, all the same ratios, but we're not recognizing risks. We're just going and looking for comments. And then we have a conclusion page as well, and there are two drop-down options. And what we're trying to go and say is, are the deviations noted between the current and the prior year consistent or not? So if we say they're not consistent, then you need to go and perform additional procedures, and you would go and refer to where you have done those procedures. Or you can say, yes, the deviations are consistent with our understanding of the entity's business and no further audit procedures are required. So it's just a confirmation basically that at the end of the day we've done this entire audit. There were a whole lot of significant movements from between current and last year, and do we understand and are we happy that they're consistent or not? If you've gotten to this point and you don't feel you understand why the deviation is there, then you have missed out on audit work. You need to go and do additional procedures on the section to go and understand why the deviation is so high. And a good example in this particular example client was, for instance, the trade receivables that increased by 222%. Hopefully at the end of the audit you understand why I have a 222% increase. And it's not because management said XYZ, it's because you've done the procedures, you've done the audit, and therefore you understand why, and you can see why, and there is justification why that increase has occurred. Okay. Document 0305 is then our final fraud impact once we've done the analytical. Now in this document, what is going to be pulling through is all of our fraud risks that we have recognized. Now the planning process was all about identifying those fraud risks, and then we needed to address those fraud risks with procedures, looking at controls, and we've gone and done specific fraud procedures in various sections. Now this final fraud impact is kind of like the last step in the risk register, for fraud risks. And what it does is it pulls through, once again, all of the fraud risks that we have recognized in the audit, okay? And it's again asking for a hyperlink to the specific work that you've done on that fraud risk. So at the finalization of the audit, hopefully it's a case of just picking up the audit programs and popping in those hyperlinks. But it is asking, as you can see, a number of additional questions about these fraud risks. The second question is here under action 3, from the record of work done on the fraud risks, have any actual fraud risks been, has any actual fraud been identified? The whole point behind a fraud risk is we're saying there is a possibility of management intent to misstate or misappropriate. So now we've gone and done a procedure because we've said there's a fraud risk. And think about those estimates that we discussed a few weeks ago. If we're saying that there's potential fraud in management's estimates, go and do the procedures. Has management tried to misstate? Did you have to put through some sort of a material journal because the client had tried to misstate the figures? Have you actually found fraud? Have you actually found collusion to defraud the company, steal money, steal assets? Okay, so there the question is just simply yes or no, were actual fraud risks identified? Now if we say yes, I'm going to make the next one no, you'll see that it changes the highlighting. If we say yes, there's an actual fraud that was identified, has the matter been appropriately reported to management and those charged with governance? So have you included it on your management report or not? Okay, and you'll see that it actually then provides a reference or hyperlink to that communication. So if you've got a management letter, you can just hyperlink to that management letter. Maybe you set up a little discussion document and you can just then document or hyperlink to that discussion document to say these are the agenda points that I'm discussing with management. Okay, and then again, because we're dealing with a fraud risk which involves management, we do need to go and consider, is this maybe a reportable irregularity? Because we've now uncovered fraud, we just need to cover ourselves. So if it's yes, does it constitute a reportable irregularity, yes or no? Again, if I say yes, sorry, I just want to do the comparative yes-no so that you can see that cells are changing color based on the questions that you're answering. So if it's not a reportable irregularity, you would need to do more. However, if it is a reportable irregularity, has the matter been reported as such to management and those charged with governance? Okay, hyperlink to that communication. And has the matter been reported to IRBA, yes or no? Okay, there is a reportable irregularity working paper and we'll look at that in a moment, but that's the process. So we're still dealing with this fraud risk. We're saying yes, it's a reportable irregularity. What have we done? There are reports that we need to submit. Okay, we need to report it to IRBA. Okay, if we have reported it to IRBA, reference it. Okay, if you don't report it to IRBA, then you need to document reasons why it has not been reported to IRBA. Hopefully there are very good ones. Okay, then lastly, for every single risk, there is also a question relating to money laundering. Does the risk relate to money laundering and financial terrorism, yes or no? Now the idea here is if I say yes, and I'll say yes to a few of these items, then there are additional procedures again that we need to do related to money laundering, but that's sitting on the next sheet. Things were getting a bit chaotic on this one, so we've moved it onto the next worksheet. Okay, let's go to the next worksheet, and you'll see here we continue action 8, 9, 10. So document that risk. It's just pulled through the risks again from the previous working paper. You've got space to go and add any additional money laundering activity issues that you may want to list, and then go and hyperlink again to the record of work done for money laundering and financial terrorism risk. Go and do additional procedures. Okay, it's also saying that it's an automatic reportable irregularity. Okay, refer to IRBA's guide to go and look at it. Have you reported matters? So the next bit is all about reporting the items, reference to communication with IRBA. It's a little bit of a repetition of what was in the previous sheet. However, just going on a little bit further, it's now asking us specifically in action 13, does the matter meet the criteria for reporting in terms of the Financial Intelligence Center Act and the POC Data Act and the PREC Act? So there are a lot of reporting requirements. So if you're getting to this point, you need to be understanding what those requirements are, refer to the communication, or if you don't have a communication with them, please give very good reasons why. So there's a lot of questions here just about the flow of when should I report. If I do hyperlink to that report. Again, there's no use having a loose document in the file and there's no link to why you have this report in the file. This just creates a little container for you to go and make reference to all of these reports that you're sending in for various reasons. Now, hopefully you don't have too many of these in your clients, and hopefully you're not sitting with too many fraud risks in your client. So this should be a fairly easy and quick document to complete. But the point is, if you do have these fraud risks, you do need to be making consideration on these various items. All right, next we're going to have a look at 0310, which is other information contained in the financial statements. Okay, this working paper, it's very simple. You'll see some more stuff is going to open in a moment. All right, no, sorry, in fact, this is the wrong working paper. I'm thinking of another one that opens additional questions. But the point is, very often you have additional information. Now, theoretically, that's your detailed income statement, your director's report, and what this working paper is asking you is inspect the pack that is going to be published and go and have a look. Is there other information included in that pack outside of the financial statements that I've audited? And we need to go and read that information. Why? To look for inconsistencies with the audited financial statements. If the director's report is saying, listen, we've made a 10 million rand profit and we're going to do so well next year, but the financial statements are saying, listen, we've done horribly after year end, we've impaired all our debtors and we're looking at a going concern crisis, we need to bring this to the attention of management. Now, very often, even though we're not supposed to be preparing financial statements, especially for those larger clients that we have, it's a sister company or something, and we're using a template to disclose all of this additional information. So management doesn't actually bring us the director's report and says this is the report you need to put in. So it could be a fairly easy process to follow. However, even in that case, we do need to document that we have considered other information. Otherwise, even though your fellow partner in another company has actually prepared the financial statements, you don't have documentary evidence to show that you've complied with the standards relating to other information in the financial statements. And again, if you're noting any inconsistencies, we need to go and look at whether the audited financial statements or other information needs to be revised. Okay, if we need to revise it, it just pops up here and it gives you a conclusion. Okay, this is an event prior to the date of the auditor's report, and we'll look in a moment at other subsequent events in a moment. Okay, so fairly easy document. Let's go and have a look at 0315, which is the going concern working paper. Okay, now in the going concern, we need to just go and consider going concern of the entity, and there are a number of questions just to try and take you through the flow. Alright, so it starts with question 1. Has management assessed the entity's ability to continue as a going concern? So in other words, has management done an assessment? And I know on many smaller entities, the answer to this may very well be no. Okay, we'll automate a little bit more on this document in the future, but we're saying if management has done an assessment, then you can go and evaluate the process that management has followed, evaluate the assumptions on which it is based, and we need to evaluate management's plans for future actions and whether management's plans are feasible in the circumstances. So there's our going concern considerations where management has done their own assessment. If management has not done their own assessment, then we need to go and have a discussion with management. What are your medium and long-term financing of the entity? Provide management's contentions can be corroborated by sufficient documentary evidence and are not inconsistent with the auditor's understanding of the entity. You can go and read through that. So we need to go and have a discussion with management. We need to look at continued support by owner management. Is it still feasible? Has the director got the financial capacity to continue to fund this business if things are going rough? Okay, and if we get beyond that point, the last section is just go and refer to the going concern indicators, and you'll see that there is a going concern indicator sheet. It's a copy and paste out of ISA 570. These are potential indicators of a going concern issue. All right. Then we go and say, have we identified conditions that cast doubt on the entity's ability to continue as a going concern? If we say yes, then we need to go and do additional procedures. And again, it's just opening content as you go. What additional procedures do you need to perform? Okay, I'm not going to go through the detail of all the questions, but that's the process. Firstly, has management done an assessment or not? If they have, we can go and look at that assessment. If they've not, then we need to go and have a discussion. Don't forget to go and have that discussion with management so that you go and can assess the going concern on the audit. Okay. 0320 is then our subsequent events working paper. And we have 3 parts to the worksheet, and there obviously is very good reason for 3 parts. Firstly, events occurring between the date of the financials and the date of the auditor's report. The second one is between auditor's report date and the issue date of the financials, and of course part 3 is going to be after the issue of the financial statements. And those are 3 very important sections, because those are the 3 sections that the ISAs are also referring to. And for each one there is a slightly different approach, and there are procedures. So just looking at the first one here, inquiring of management and where appropriate, those charged with governments as to whether any subsequent events have occurred which might affect the financial statements. Okay. Record of work done. So who did you have the discussion with? Again, if you want to create your own working paper as a template, that's great. Otherwise, just go and document in these cells if it's not too much. Were events identified occurring between the date of the financials and the date of audit report? If you say yes, go and there are additional actions, okay? All right, so there are various steps to take, and this is before you actually sign the audit report. So if you are busy doing a RAC file and you're about to sign the audit report, you would need to try and get to at least part 1 of 0320 before you sign that audit report. Go and have these discussions with management. Once that audit report has been signed, we then need to consider part 2. For very many entities, many of the entities that I'm sure many of you will audit, that is the same day. Signature and issue date are the same day. So there probably won't be too much that you need to assess between these 2 dates. However, do just be aware of it, and what it's basically asking you is list subsequent events. What are these subsequent events? How did you become aware of the matter? Discuss with management, and it takes you through a process of deciding what impact this is going to have on our audit report. Do we adjust our audit report, or is it an event that is not going to impact our audit report because it's not material? So that's what you do between audit report date and the issue date. And then lastly, once we've issued the financial statements, again, the process is similar to part 2, but we're going and documenting what new information have we found out. So has management suddenly taken out a big loan, or have they suddenly disposed of a section of their business, or any one of those events. And it's also, again, taking you through what steps you need to be following. So just look at question 7, for instance. If management amends the financial statements as a result of information that became known after the financials were issued, okay? And there is that whole decision tree in the ISAs about what is an adjusting event and what's a non-adjusting event, what's a disclosure event where you just need to disclose the information, you don't necessarily have to change the values. There's a whole decision tree around in the background there, so please do understand what the ISAs are asking you. This is just where you can go and document these processes that you're following, and it'll give you a guide as to what you should be considering. So that's the events after the financials have been issued in part 3. I'm not going to really say anything more. Subsequent events, very often a forgotten portion of the file along with going concern, but important to go and give an indication that you have considered things appropriately between the time of the audit and when you're actually signing off those financials. And of course, the longer it takes from your audit completion date to when you sign those audit reports, obviously the more documentation you're going to have to look at. So hopefully you're not delaying audit reports too much. 0325 is then a look at reportable irregularities. And once again, what this document is it's a bit of a guidance document to help you identify whether or not you're sitting with a reportable irregularity. So it's asking you, all it's saying is, please document the matter that you've identified. So that has been inappropriately recorded, or whatever the case is, whatever that event is, and we put a hyperlink to where we've identified this. Now this could be during the audit, this could be while we're signing the financial statements, it could be after the financial statements. It's just there. If you're identifying something that could be a reportable irregularity, go and document this. Okay, and it then takes you through those prerequisites. So firstly, is it an unlawful act or omission? And secondly, was it committed by any person responsible for management of the entity? If both of these are yes, all right, then we need to go and do additional work. Okay, and then as it was in that fraud impact document, it's taking us through what have we reported, whenever have we reported it. I'm sure there's a question later on. Send another detailed report to IRBA. There we go. Must include a statement as that as the registered auditor you have the opinion that either no reportable irregularity has taken place, or it has been adequately resolved, or it is a continuing reportable irregularity. So it's taking you through all those steps of the Act and of the guide to go and assess and follow up on this reportable irregularity. So use this, as I say, it's as a guide to help you through the process of assessing your reportable irregularities. Unfortunately, it's not a working paper. This is what you can do to go and find reportable irregularities. Reportable irregularities are by nature things that come up per chance. Usually we'll be doing a procedure for something completely different and we realize, hang on, but these guys are not submitting their VAT returns correctly because we've done a VAT turnover recon, for instance. And then we need to go and consider the VAT outputs are inappropriately disclosed. Okay, so there we go. Is there an unlawful act or omission? Is it committed by management? Yes to both. Okay, now we need to go and consider, do we submit a report to IRBA? Okay, we've submitted the report to IRBA, but we find out actually it's the accounting system and their net VAT at the end of the day was actually disclosed correctly once we've done additional procedures. But that's the process. So the working paper is there to help you through the due process of assessing your reportable irregularities. 0405 is a nice little template to kind of give you a little bit of a guide into the following year's audit. And you'll see that all the cells are blue, indicating that this is a roll forward document. And the whole point behind this document is that what I complete in 0405 here this year will immediately form part of my planning next year. So when I open up my planning documents next year, these comments from this year's file are going to appear there. So what section of the file do I have special matters that require special attention? Describe it. What do I want to do about it? Do I want to make sure that I raise a risk next year as a result of my findings? Or do I want to follow a different approach in a section? The second part is also just select suggested amendments to the audit program. So what section of the file, what's the subject matter, what alternative audit procedures would I rather be doing? So it's just a memory jogger for you, because very likely you're signing off your audit report hopefully by June, July for your February year end, especially if it's one of your bigger clients that has more demanding deadlines. It's a long time. It's more than 6 months before you're going to be doing planning again. And you're going to have lots of great ideas now, this year, but you're going to forget them when you start the audit next year because suddenly it's a rush and you need to get the planning done and go. So this is just to try and help you remember these items next year. You can come and complete this document at any point in the audit. It's not fixed to when planning is taking place because this is not an ISA document. This is a help document. This is helping you out for what you're going to need to do next year. So if there are things, do document them, it will make your life easier in year 2 of the audit. And that's, again, where RAC is trying to position itself to give you as much assistance as possible year on year to try and make things easier for you. Then we get to 0505, which is our overall partner evaluation. Okay, now what's coming through on this working paper is a summary of a number of key items that we have in the audit file. Okay, so it will start talking to me about, firstly, materiality. And what I often say in my training sessions is that this document itself, if you print this document and take it with you when you go and discuss the financial statements with management, it covers you in quite a few things, and it might be nice to get a signature from your client on this working paper to put in your manual file. I know that a lot of you are going to try and keep electronic, but there's always going to need to be 1 or 2 manual documents in your file that you're going to need to have for signatures, for instance, and manual financial statements. But they can sign this off, and it covers you that you've had this discussion with management because it's talking about my materiality. Now, there's a lot of debate around materiality, and I've mentioned 1 or 2 things before, but at the end of the day, if management feels that your materiality is too high, it's something you need to consider for next year. But very often, owner-managed businesses, that materiality can be great because they aren't really, it's going to take a heck of a lot before they make different economic decisions in their business. It then also just confirms, okay, in this particular file I hadn't completed it in document 04, but it's confirming what my accounting framework is. Is it IFRS? Is it IFRS SME? Whatever the case might be. Okay, and then just a hyperlink available to your audit report to go and confirm that your audit report is actually talking about the correct framework. It then also will pull through any subsequent events that you may have identified, and it's from action 1, 2, and 3 in your subsequent events working paper. And again, has my audit report had to deal with these subsequent events? Depending on the nature, it might be not applicable, but it's just going and assessing what those subsequent events are that you've documented. It also then pulls through information from your going concern, and it asks you to make a final assessment about disclosure of going concern in the financial statements. And at this point you'd be having a discussion with management, and maybe this is actually the discussion that you have with management about going concern, so that you can go back and document it fully in 0315, depending on how you're flowing through. Okay, document actual fraud matters from the fraud working paper. I haven't completed that document completely, but this will then pull through any items where actual fraud has been identified, and again, this is where we discuss these with management. So if the working paper on fraud matters was asking you to document where you've discussed it with management, maybe you can hyperlink it to 0505 because this is the document you're using to have that discussion. Okay, reportable irregularities, again, I haven't completed it adequately, so it's just pulling through a 0, but there was 1 reportable irregularity. It'll document it here for me, and there we can go and communicate. Sorry, what I also just want to point out, for instance, on the subsequent events, because there are none, we do leave these lines open so that you can go and add. If you're not using our template, you can still use this to document subsequent events. Okay? Was there an EQCR required? Okay, and if so, here's a place for a reference to the work that was done by the EQCR. And then there's a whole section on looking at the audit reports. What was my audit report in the prior year? Okay, was it unmodified, qualified, adverse, disclaimer? Okay, and document reasons for the modification. Document any emphasis of matters. Document any other matters that were disclosed on your audit report last year, and then the current year audit report is just confirming what framework you should be using. Again, because I haven't discussed the appropriate framework, IFRS, IFRS SME or other, it's telling me it's an ISA 700 report. It would usually be an ISA, it's telling me it's an ISA 800 report. It would usually be ISA 700. Was the correct audit report used in draft? What type of audit opinion was given in the current year, and obviously you'd be sitting with your financial statements with the actual final audit report in. So this is just a comparison of, look, what had we reported last year in my audit report, what is going on in the current year. If you have a lot of emphasis of matters last year, you should be looking, maybe should there be emphasis of matters in the current year. It's just a, for each of these, it's just asking you, have you considered these items in the audit report for the current year, because we had qualifications last year, if it's applicable. Then also, once you've completed your summary of identified misstatements, any unadjusted misstatements will pull through to this working paper. So this is again why I say take this with you to that meeting, management signs it, and then you've got proof that you've discussed these unadjusted misstatements with management, and you don't need to go and worry about another document to document any of this. Okay? Does the above agree to the schedule of misstatements? So this is really if you're not using the automatic linking, or if you're doing your own templates, make sure that you're completing this adequately. Where prior your modifications were not adjusted was a modification in the comparative information included in the current year audit report. So it's just asking you about, have you assessed the prior year adjustments when you've been doing your current year modifications? Were prior year adjustments made to the financial statements? So there were maybe prior unadjusted items that you had from the prior year, but because of maybe a change in materiality or a change in nature, you've actually gone and made those changes. If they have, go and document it. Have you done additional substantive testing to confirm those? And here we would then also go and list any current year emphasis of matter items, especially if they're coming out of this assessment of unadjusted misstatements. Then we talk about the management rep letter. What's the date of that management rep letter? What's the date recorded on the signed audit report? And it's looking at the dates to go and make sure that we're not sitting with hugely different dates and what has happened between those dates if necessary. And then we get to a partner conclusion, and it's a drop down. So are you satisfied that an appropriate auditor's opinion in the financial statements has been expressed, or are you not satisfied? Hopefully at this point you are satisfied and you can actually issue that audit report. If you say no, you're probably a little stuck. Okay, so it's just telling you, if you're not satisfied, document what changes need to be made to the audit report and why. Okay, because this is again, maybe you just need to make those changes, you document it, because out of that meeting you discussed something more. And then there is sign-off for the partner, and that is then the final conclusion on your audit. All comes down to this final document. What is my conclusion? Am I happy? And can I sign off my audit? The last document that I'll look at is the audit sign-off control sheet 0605, and all this document is doing is it's going back through the entire file for me again and pulling out key information once more. So it's going all the way back to the planning documentation about the EQCR, about who has signed off. Now remember, when we did the individual team member declarations, if you recall, one of the requirements was that you needed to do an assessment at final as well. So it's now checking, have we signed off at the end of the audit? And in this case, all of these guys have said no, they haven't signed off. So they need to go and sign off this document at finalization. It again looks for any unanswered questions. Now during the planning phase you might have said, well look, they haven't had a chance to go through it in detail, so I'm accepting things at that point. But by now all of these items should be resolved. So you can't really go forward if things are not signed off. When we get to things like the audit program, it's going to pull through a summary for every single audit program that we have in the file. Has the execution addressed all the risks? Have we needed to do a change in audit approach? Has it been signed off? Obviously I've not done any of these things on these audit programs in this file that I have, but hopefully you're at a point where it's telling me that execution has addressed all risks, and then you can continue. It then also just pulls through, have the finalization documents been signed off? Okay, so was the final analytical review signed off? Yes or no? Was the final fraud impact signed off? Yes or no? Because this is your checklist, is everything that I need in the file actually contained in the file, all the way through to your final partner evaluation. And when you are happy and confirm that everything is in here, hopefully by then your file is complete, you've signed off the audit report, and it's within your 60 days. You can close the file, archive it, and you're done with the audit. And there you go, RAC audit sorted. Okay, Shane, so that's from me. Any questions that I can maybe address? And guys, if there are any other questions, please start asking them. And let's see what we can address. We've got 20 more minutes to go through a few questions.
Thanks, Leon. I have got one that I've just published from Arno in Queenstown, and I'll just put that up. And guys, yeah, just as Leon said, if you have got any questions, please send them through now. I'll work in the background and publish them so that you can all see. Gordon, I see you've got your hand up all the way from Springbok. Do you want to just send me a quick message? I can open your mic if you want to ask a question, but maybe you just want to confirm that before I cross over to your microphone. Thanks, Leon. Back to you.
Okay, I don't know, in the background I'm busy trying to see if I can pull up the standard. I might have to get back to you on that one. Look, my understanding is that there is a final analytical review required, but let me try and get that reference for you. See if I can come up with that. Anything else?
And there's another question that's just come through from, yeah, there's one from Jeffrey. I'm just getting it ready. I don't know if you want to have a look at it so long, just while I get it ready for publishing.
Okay, is that about the reportable irregularities in a review engagement?
That's the one.
Okay,
Thanks.
all right. Okay, sorry, and while I'm searching, I don't know if somebody else knows offhand how to answer these questions, please also pop it into the question and answer column. You can help me out. Godfrey's question is about reportable. A registered auditor has identified a reportable irregularity during a review engagement. Who should he report to? Now, I'll stand under correction, and again, folks, please help me out here on this one. If you are not doing an audit, I somehow don't think there's a requirement that you actually report that reportable irregularity. It's not that you shouldn't report something, but it certainly wouldn't be to IRBA. But if there's I don't know, the CIPC or GSG lodge a case, but I don't think there's a statutory requirement for reporting a reportable irregularity. Okay, sorry, there I see there's an answer I'm getting for Farida, and that I think is pretty much what I was saying. She's saying that for an independent review, if you pick up a reportable irregularity, you have to report it to the CIPC, so it is a report requirement. And thanks, Warren, I'm getting an answer as well. Okay, so the CIPC is the people to report to in the case of a review engagement. Okay, so IRBA is if you're doing an audit. IRBA look after audits. They don't exclusively look after reviews. There are a lot of different entities or organizations that will be able to certify you to do reviews, and so that would go to the CIPC.
Thanks, Leon. There's also a comment that's come through from James, and I don't know if you, yeah, I think it's just a comment, James.
Yes, yeah, on the analytical reviews. Thanks, yeah, James. It's also confirming about planning and completion, analytical reviews. I'm sorry, so still in the background trying to find the reference, but I think I've got the wrong way. I'm looking at the wrong ISA, so I'm still looking for it in the background there.
Okay, guys, just at this point, if you do have a question that you want to ask and you would prefer to just ask the question, in other words, speak instead of typing up a story, you will need a microphone. If you haven't got a microphone, though, it's probably still worth a try. If you've got one of a sort of a fairly modern laptop, in other words, just a couple of years old, you'll probably find that it has a microphone built in. And in which case, if you want to try that route, no problem at all. Just look for the red arrow on the top right-hand corner of your screen. Look for the little hand, and if you put your hand up, That's how you put your hand up in one of these webinars, in case you're wondering. Then I will cross over to your microphone and unmute it, and everybody in the meeting room, we've got 100 participants, everybody will be able to hear you from all over the place. It's quite exciting. It's like talking on the radio. So there we go, guys. That's just another option for you. Neil and Sunday, you guys have sent through questions as well. Leon, if you want to just have a look at those, I will publish those quickly. Let me just get them ready. Yeah, I think Charlton has just sent through something asking you if it helps as well. Sure. Okay, this is going to keep me busy in the background. Leon, if you can just, yeah, you have a look at the questions so long, I'll get them ready for publishing.
Okay, I'm trying to make my screen wide enough to read them.
Okay. All right, I'm just getting yours up first, Sunday. Sorry, over to you, Leon.
All right, so the question from Neil here is, an auditor advised client yesterday that if a trust with a minor beneficiary is a shareholder, then the company must be audited despite the fact that the company is not requiring an audit in terms of the MOI. Neil, I must be honest with you, I've heard so many versions of this exact question, and I honestly don't know what to answer you on that. The exemption from an audit is where you have an owner-managed business, and for that all directors must be shareholders. So if your trust is a shareholder, a trust cannot be a director. And then some people have said to me, no, but there's an exemption if all the trustees are also directors of the company and the trust. I'm afraid I've just heard too many versions of that. I really don't want to stick my neck out there. I think need to read through the SICA guide and maybe even submit a query to SICA on something like that. It's just, I mean, I've heard so many versions of that story. It's a bit scary to try and give a comprehensive answer to that. Then Sunday's asking if you need to print the audit file. How's it managed in RAC, especially to save time? How can one print through the file? There is a bulk print option in Draftworx. Shane, I wonder if it's worth quickly popping the screen over to me. Let me show you where that bulk print button is, so that you can.
Brilliant, Leon. I'll do exactly that. Crossing over to your screen.
That's a useful one to know. So if you go to the File menu, and just check. I want to make sure that the audience is seeing. Are you guys, Shane, are you catching up with me over there? Can you see the File menu?
Yeah, coming through clearly. Thank you. Go for it. Yeah.
Okay. All right. So you've got this bulk print option in the File menu. If you click on that, it then lists for you all of the audit programs, all of the items under documents, under financial data, so your financial statements, for instance, and your lead schedules. And you can literally go through this and tick every single item that you want to print. It also confirms what sign-offs and things there are on the documents, and you literally just go through, tick all the documents that you want to print, and then you can save them all as a bulk PDF document in one shot, or you can print them all directly to your printer. Print all. That button is to select them all. That's not to print it. That's you can go and save all of those items. Select your printer. Can't remember which. In fact, it doesn't seem to print directly to the print. Oh no, sorry. There's the print button. Okay. So if you want to print them all, you click the print and it goes to your printer. It's going to use up a lot of paper. Or you can just save it all as a PDF and then print selected pages. Now please bear in mind, of course, that when I select a working paper, it's going to print all of the sheets within that working paper, which means that the guidance sheet on every single worksheet or working paper is going to print as well, which is going to be a waste of paper if you are printing a manual file. So it might be just a process of when you are working through every section of the file. Let me just go to one that like the overall partner evaluation, we only want the first page to print. Go to view and we can switch off the guidance tab. right, then it won't print the guidance tab because it's no longer in the same way that you'd switch off sheets in your audit file. In your financial statements, you can switch off sheets as well. What we do when we print, the first thing we try and do is we do try and see if it'll fit on a portrait. If it doesn't fit on portrait, we try and make sure your working paper will fit landscape. If it doesn't fit landscape, then we start reducing the size of the print. So if you have accidentally typed a 0 in column XYZ 200, you're going to have this insanely small print out because the printing just didn't work on that particular working paper. But easy enough to quickly put them all to PDF, scroll through, find any where there's an issue, and then go and work on those items again. Okay, Shane, if you want to go back to those questions.
Okay, we'll do, Leon. I'll just take back the screen. I've published the 2 lengthy ones from Charlton. Charlton, thanks for the info. I think you've been just checking things out in the background, and we appreciate that very much. Sorry, I just need to make sure. There we go. And then there's also another comment from Farida as well. Maybe if you can just comment on Charlton's two points there.
Thank you. Yeah. Thank you, Charlton. That's the yes, directly out of the ISA. So I don't know, coming back to your question about do you need to do a final analytical? Sorry, I was scrolling through too quickly. I didn't find paragraph 6. That's great. Paragraph 6, ISA 520. The auditor shall design and perform analytical procedures near the end of the audit that assist the auditor when forming an overall conclusion as to whether the financial statements are consistent with the auditor's understanding of the entity. And that's exactly what that analytical review working paper is doing, is it's saying, here's the variances, is this consistent with your knowledge? All those other all the standard ratios as well, it's asking you, are these? So thanks very, very much, Charlton. That's the answer I was looking for. Oh, in fact, sorry, there you even put the quote up for me. Fantastic. Farida, electronic versus manual files. I am an advocate for saving trees. I don't believe in printing audit files. When I was doing my articles, the firm I was with had the stance that no electronic file had yet been involved in a court case. Therefore, they were going to continue to print all of their audit files until such time as an electronic file was accepted in court. It wasn't that any had been rejected in court, it was just they said nobody had accepted it yet. So the process of printing is going to come down to how you're wanting to do your files, what do you think your files will look like, okay? One of the concerns around an electronic file is that if you open the file 90 days after your sign-off date, it does technically change the date of the specific files in the background. So you do need to have good archiving processes if you do want to save stuff electronically. And also you need to make sure that you've got off-site backups and all those wonderful controls that should be in place to preserve data, because you're supposed to keep that audit file for many, many, many years to come in case there's ever a query coming back to what happened on that audit. And it needs to be immediately readable, accessible, and that's why there still are a lot of firms that opt for a manual version, the manual signature. Quite frankly, it's easier to change a manual date when you've printed a file than trying to change the electronic date. It's going to come down to how well your firm will be able to handle the necessary disciplines around keeping an electronic file at the end of the day. The locking the file, Frida, the locked file does preserve the dates, okay, because you can't go in and access. But what we do prefer is that you archive the file, and then that stores a date in the archive file. Then when you need to utilize information of that file, even though you're not changing it, you leave the archive where it is. You just open the file, you do what you like, and you delete it because there's still the archive version in the background. Okay.
Okay, great. Thanks, Leon. And sure, guys, I've been working madly in the background here, and I hope I haven't dropped a question. If I have, please can I ask you just to send it through again? I don't know, Leon, did you see there more coming through there? It was a bit of a rush. But yeah, thanks, guys. I need to give credit. We've got Charlton there, but it's actually Damien who's been sending through all those comments. So Damien, sorry about that. You're obviously sitting with Charlton, and but yeah, we'll give you the credit where it's due. Thank you for your help there. And just on that note, guys, please bear in mind that we've been keeping a very careful record of who has participated, but we've only got the email addresses of the guys who participated. I know there's a number of you out there who are tuning in from a boardroom, and you basically, there's like 10 of you sitting around a boardroom table, but you're only using one registration. We need those registration forms, please. They need to be properly completed and signed. If you want us to, we do have a choice. We can send to the individual email addresses, or we can send it as a bulk to the office, and then you guys can distribute. Maybe just mention that on the actual registration form when you either email it or fax it through to me, please. I think that Leon, yeah, I don't know. I think maybe we can call it a day there. Jason is just saying, please go back to the previous Q&A sheet. Okay, I'll do that, Jason. Sorry, Jason just wants to have a look at something that was on the previous page.
All right, yeah. While you're doing that, also there's a question from Arno about there we go, there it is. What matters would you include in the working paper matters for follow-up in the next audit, other than what is already included in the management report? Yeah, Arno, the purpose there is just like we did this procedure. So let's say for property, plant and equipment, your procedure was you drew a sample of assets, and you while you were at the audit, you went out and you tried to go and physically verify those assets. But you realize that on the date of the audit is in the busiest time of year for them, and all of their machinery is actually out at sites doing work. So that verification was very, very difficult. And maybe it would be better because at stock take, which is in December because they have a December year end, the business is closed and all the assets are on their premises because they're not actually busy with any construction work, for instance. So the note you'd make to yourself would be, remember to do the fixed asset verification when we do the stock take at year end, for instance. It's that sort of just practical help. So it's not about reportable stuff that we want to identify for next year. It's just about how can I make this audit a little bit better next year. Also just note, sorry Neil, your comment about the PI score determining whether an audit or review is required. I think maybe I was alluding to whether or not the exemption from a review is when you're owner managed, but if your PI score is below the level to require an audit, then the fact that the beneficiary is or there's a minor beneficiary in the trust that's a shareholder, that wouldn't jump you from review to audit. You're quite correct there. So if your PI score tells you that you don't need an audit, then you don't need an audit. There's no rider that says because of the beneficiaries you suddenly need an audit, unless it's a requirement in the memorandum, unless your MIS says we must audit. If you don't require an audit in terms of the PI score, you don't need an audit. I was confusing the matter between a review and nothing. And then the shareholding is an issue. So I hope that clarifies that for you there, Neil. Okay. All right. Okay. Thanks, Neil.
Sure.
Confirmation there. Yeah. Okay. Lots of technical stuff there.
Yes, like
I think Draftworx should open up a technical department.
Yeah, I think you are the technical department, Leon.
That's the problem. That's scary.
Okay. Yeah. Okay. Listen. Well, I think it's time. So I'm conscious of that. And so, guys, what I'm doing here, I just want to run two polls, if I may. The first one is, can you please just give us as we ask for every session, are you going to give us the tops? We hope so. Other tops were very interesting and helpul. We'd be delighted with that. OKs, we're not crazy about, but you know, if you feel you need to vote, okay. If there were any sound issues, you can obviously vote for the last one as well. But Leon, just while the guys are voting, thank you very much indeed for all your preparation, and it's just been an awesome session. I actually, if you don't mind, Leon, I want to run another poll and ask the guys who would be keen for another. I should have checked with you first. Another RAC series next year, but I just want you to see. I think that there's going to be demand for it, even if it's a slightly updated. You know, there's always going to be new stuff. And,
who wouldn't want
would
8 hours of verifiable CPD first thing in the year?
Well, it was one of the other polls that I wanted to run. Was, do you think the webinar has been good value for money? And then I remembered we're not actually charging for it, so I don't know. It's a bit of a no-brainer. But Leon, listen, I'm just going to close the poll. Not everybody's voted, but we've got a 60-40, 60% voting tops, 40% very interesting and helpful. We didn't have a single okay. We didn't have a single not great sound issues. Yes, like that is amazing. I haven't seen that before. Thanks, guys, and that's a credit to you, Leon.
So
and then
you're
just
not offering
I'm
an
going to do
extra
it.
hour to those that said tops or something, are you?
Not at all. Listen, we're also going to be doing a series on ethics next year, so you know I've got to be careful about that sort of thing. Okay, guys, I'm just running this poll here as well. What's that?
You're not the auditor. You don't need ethics.
Okay, all right. Thank you. Thanks for that. Guys, would you be keen on a RAC series next year? I'm just putting it out there. I didn't even check with Leon first. He's probably going to, if we were sitting in the same office, he'd probably give me a kick. But I'm quite a few hundred kilometers away from him, so I thought I'd risk it. But really, what we're just saying to you is, you know, would you be keen if we did another RAC series? And then maybe another comment as well, if you can just text it through to me. Do you think the Friday morning slot is a good one? 8:30 to 9:30 on a Friday morning. Do you think that's the one to go for, or can you think of something better that we need to consider? Yeah, great. Thanks, guys. Leon, I don't know if you're keeping an eye on the question panel, but there we go. There's lots. We'll have to. I'll send you the report, Leon, so that you can actually go through it as well. But thanks for all the comments coming through, guys. I'm just picking out some of them. Yeah, Friday mornings it appears to be a good slot. Great way to finish off the week. Thanks, guys. And Jeffrey's saying keep it up. Friday is perfect for seminars and trainings. That's from Philip. Thanks, guys. And Neil, 8:30 is good for you and hopefully for the rest of the team as well. SG is saying Friday mornings are good as well. It was really good. Just a comment from Goret, and that will be Garrick as well. Thanks for the course. It was really good, and I hope you run some more. There we go.
How quickly can you set up a poll? There's maybe one other thing that we can consider, because I see there's a lot of interest. But maybe what would the feeling be? Because obviously RAC is our software side, so we want to offer the software training for free. But how would people think about getting an audit expert in? It would then be a paid-for session to maybe come and give a little bit more practical advice / audit training on top of the RAC. So you kind of have a split session where we do a little bit of literally audit theory training in the background, and then the implementation of that theory into RAC. Would guys be interested in that? But obviously that we wouldn't be able to offer as a free series.
Okay, I'm
Maybe
going to put that up. Leon, you just,
that.
Yeah, okay, the wording, I'll put you audit expert, practice, advice, audit theory, yes please, no thank you. Would that be a...
That's fine, yeah. Remembering that this would be then a paid thing.
Yeah, it'll be a paid for session, and I think that you're probably thinking of Protect a Partner or somebody like that.
Yeah.
Okay, all right. Let me just publish that one, and I must say that, okay, I need to just hide this one. You can see there was a 95% vote for that previous poll that we ran, which is, so Leon, I'm sorry, you've got no choice. You're going to have to present another one. I think you're actually just trying to get out of this. I've just suddenly worked out, you know, what your question is there. You want to rather get somebody else to do it. No, that's no good, man.
If we went that route, I think we'd probably look at a 2-hour session in the mornings, whereby we'd give sort of an hour of the of the theoretical side.
Okay, all right.
So, I mean, what we've done in this series is I've gone through the guidance sheet and I've said, there are the standards, read them. So what I'm kind of saying is before without saying just go read them, I'm going to say, well, let's go and unpack those a little bit for an hour, and then we spend an hour with of the implementation then of those practical items that we've had. I mean, it could probably be 2 different sessions running concurrently, so you could be a member of both with a bit of a break in between or something.
Sure. I really like the sound of that, Leon. Brilliant. And yeah, just the comments coming through. You know, Sunday is saying audit theory, especially on risk assessment and how to address them in audit procedures. Yaku, he would like to say keep RAC separate, but I do believe an audit expert to present from a technical and practical point, and maybe Urba discussions. There we go. Takiso is saying he thinks it's a great idea. Also Garrick as well. So yeah, Warren, thank you for your positive comments there, guys. And I think your votes have also just confirmed it for us. There we go. We've got a 94% vote. And
1% difference.
Saying no. Yeah.
Okay.
So yeah, there we go. Yeah. All right, Leon, thanks again for everything. And I just love presenting webinars with you. You're really just so professional. And thank you for all your preparation. I know that you've spent many, many hours just on getting this all right. And just for all that you've done with RAC as well. I really believe it's taken Draftworx to another level. So thank you for that, man. And,
thanks very much, Shane.
Yeah. And thanks everyone for tuning in. And we will take care of your certificates. Please don't forget to send us your, just a couple of notes on that last slide. If you need any technical assistance, the best support you will get in the world is just from Draftworx support, DataPrime support at dataprime.co.za. There are 2 phone numbers there as well. And then Leon, I've put in Leon's email address so that you can, if you have something that you really need to bounce off Leon, you can send it through to him. And then I've got my contact details there as well if you need anything regarding the sort of technical side of the webinar, if certificate issues and things like that. But yeah, guys, thanks for tuning in and look forward to working with you in the new year. And on that note, all the best for the holiday. You'll enjoy your well-deserved break and take it easy. We'll see you in 2016. From my side, cheerio.
Cheers, everyone. Have a great day further. And yeah, just to reiterate what Shane has said, have a blessed Christmas season. Hope you all stay safe, and yeah, looking forward to hearing from you in some training next year, it seems. Keep well. Goodbye.